and the company coming out with a very cautious tone. What is your first impression of Sasol's results?
First impression, what we expected. I mean, what is Sasol? It's an oil company. We can see the oil price. We can see where the rand dollar is. Obviously, both of them hurt the earnings. If we drill into it, I mean, the dividend was frankly a surprise. And I remember 6 months ago when they came out with results on this very show saying that the dividend was disappointing. And this time they went the other way and said, well, let's sort of bump the dividend up. But a couple of other things. In the last set of results, they had a hedge in place which netted them 5 billion into the top line. Unfortunately, they also had a whole bunch of competition fines which cost them 5 billion. But I know, just interestingly, the hedge is out of place. Now, Sasol's long had a strategy of hedging the oil price, 30% of their capacity, and that's no longer there. So obviously they're seemingly taking a bit of a guess and saying probably closer to the bottom than we are the top. They're probably more or less right. But at the end of the day, Sasol in oil, it's a stock you pretty much got to be holding, certainly if you own a motor car.
Well, let's pause there for a moment and hear from Pat Davies, the CEO of Sasol, on the company's interim results.
Tackled costs in two main ways. First of all was to have a look at all of our functions throughout the group, from head office, so whether it be HR or supply chain or information management, and look to see how we could become more efficient in delivering those services to all of our business units. And that's a process we've started using a lot of international expertise, and it's certainly a process that we're not through with yet, but has already yielded some savings. And the other one was, of course, just to challenge our managing directors of all of our businesses and say, we need you to go and find better ways of doing things and come up with some business improvement plans. And collectively, in the 6 months, we've come up with 600 million rands in savings so far, and we believe this is sustainable. And there's more to come. There's more value to be gained from that.
Some of the divisions that came under pressure, Synfuels down 70%, your international Synfuels also under pressure, down 90%. How do you plan to turn those businesses around?
Well, starting with Synfuels in this country, which is our big facility, 160,000 barrel a day facility in Secunda, operationally it performed extremely well, both on costs and volume. So there's not a lot more we can do to that. We will assume that oil prices will creep up gradually, and currency effects will perhaps not be as severe into the future, but we'll continue with what we're doing, both on the cost and the volume side. And to that end, the board has made a very significant investment of about 12 billion rand to grow the Secunda facility by an equivalent of 5%, and of course that'll improve its profitability going forward as well.
Looking at the currency of the South African rand, many resource companies have been complaining about it, and they are hoping that we'll see rand weakness from here. But the reality of the matter is that we do have a volatile currency here in South Africa, and some investors say that business plans should be based on the assumption of a stronger rand as opposed to a weaker rand. What's your strategy going forward, considering that some are calling the rand at 6.90 rand as opposed to closer to 8 rand to the dollar?
Well, I think 6.90 is a little severe. That we wouldn't be as conservative as that, but we tend to be careful. We tend to be cautious given this massive volatility that we see. So we plan for a fairly strong rand, and we must just cut the organisation to cope with that. But that's pretty much all we can do. We're not into rand hedging or anything of that nature. We must just improve the efficiency of the business, which we've started doing, and we will continue to do. But the single factor that makes us cautious in our outlook for the rest of this financial year is the rand, because 10 cents change means 800 million rand on our operating profit. So this is hugely volatile, so we must remain cautious because we don't know where the rand's going to go.
Just looking at that, a 10-cent change in the rand resulting in 800 million rand impact on their operating profit. Very difficult to manage through that volatility. Simon.
It absolutely is, but I like the response to it. Don't try and hedge it. Don't try and say the rand isn't going. So accept it as in essence, it's a risk within the broader business that Sasol operates in. They're not trying to get clever or something. They're cognizant of it, but they're realizing the rand is something we can't control. Let's look at those areas where things are controllable. Yeah, they're a price taker, both in the oil price and the currency price. Those 600 million he was talking about slashing, that's what they can control. That's what Sasol needs to knuckle down and do. And they remain, at the end of the day, even with currency volatility, a hugely cash generative business.
291 rand, it's up 2.5%, outperforming the broader JSE All Share, which closed 0.75% high. What do you make of current valuations on this one?
I think for where it's sitting right now with the oil around the 80 and the rand around the 740, although it's now down to 735, but these numbers were out sort of more about the 760 level. I think Sasol's probably fairly valued if you look at the sort of 1, 2 or 3 year term. If you've got a longer time horizon, we're going to see oil at 200 at some stage in the next decade or so, and probably beyond that, and that's really the huge strength in Sasol. And also when you look at talking to China, the different plants that they're putting together, again, that longer term, medium to long term horizon for Sasol. If you've got time on your side, current price is fine.
JSE Limited out with annual results earlier. Godfrey Matuza was speaking to the CEO, Russell Loubser. JSE Limited closing at 64.20, also outperforming the broader market, up 1%. Your view on this one, Simon? We haven't discussed the JSE Limited at length ever.
I mean, let's pull some stuff out of it. I mean, their derivatives business really suffered, got hurt. I think we understand that. I mean, they comment about Lehman Brothers, who'd been a big player in this market, and then they sort of say, and didn't survive the crisis. Well, no, they didn't. A lot of the directors who'd been sort of taking single stock futures in their own underlying companies, that's disappeared. So the derivatives took a hit. Equities doing well, which is obviously the core of their business. They're going through a lot of integration with BISA, with ramping up their IT infrastructure and the like, but at the end of the day, a good set of numbers, a highly cash generative business, sitting on about 900 odd million in cash. That's in part their guaranteed fund as well, that's, absolutely, but that's not margins and the like. But in essence, and I know that the JSE isn't comfortable with me saying this, they're a monopoly and there isn't a competitor and there isn't one on the horizon, so they kind of got a really good perimeter fence around them and that people aren't going to come and compete with them, and a good business. I mean, is it cheap? No, but I don't think it's ever been cheap, and I'm not sure it will ever be cheap.
Simon, just looking at the share price graph today, it did spike just after the open to over 68 Rand. Any reason why we saw that spike? It stands out like a sore thumb.
I saw it as well, and I went and did digging. It was small trade. It might have just been a case of it was right after the open. Someone might have put an at-market order in rather than a limit order, and just got a bit caught out. As a stock, it's not one of the higher liquid stocks. It's you know, sort of not in the top 40 or 50. It's probably in that second half of the market. So if people aren't careful and they put an at-market order, they can suddenly hit a price that's out of the normal range.
Very quickly, we need to focus on AngloGold Ashanti. Mark Kutufani, the CEO, was speaking at a mining conference earlier today, and he has said that they are hoping to unwind their hedge book sooner than their previous target of 2014. That stock closing at 278 Rand. It was down 1.5% today. What do you make of the comments out of Mark Kutufani? He's also saying that gold will trade between $1,000 to $1,200 an ounce this year, and anything under $1,100 an ounce presenting that opportunity to trim its forward sales. I was surprised by the lack of bullishness in the gold price, 1,100 to 1,200. Most gold bulls, and no disrespect, if you're a CEO or a director of a gold mine, you have to be a gold bull, are sort of looking for maybe as much as 13 or 1350 at the end of the year. I suppose they want to temper it. They don't want to get too carried away with that. Their hedge book, and either they decide they have or haven't got it. They've taken a decision to get rid of it. It was a humongous hedge book. You can't just take that amount of gold, and there's a fair bit of uranium in that hedge book at the same time, and just throw it into the market and swallow it up. It's going to take a process, and although they're expediting it, we're still talking a number of years to go. I'm not convinced. I suppose what's happened is they got caught on the wrong side of the hedge, but we've always had a situation where we had our marginal gold mines, which really was the DRD and the like. Then we had our big three, of which two were unhedged, Goldfields and Harmony, and then AngloGold Ashanti was hedged, and it gave distinction, differentiator to the investor, what they were looking for. AngloGold Ashanti gave you gold, but with perhaps a little bit less risk. I think maybe that hedge book got a bit carried away and they hedged too far into the future. Simon, just very quickly, we are running out of time, but again, just looking at the forecast for group output in 2011, markets expecting between 4.8 million ounces and 5 million ounces. That's up from 4.6 million ounces this year. And given the fact that we're down 1.5%, underperforming the broader JSE All Share, shouldn't that news have translated into positivity on the share price, in your opinion, quickly?
It should have, but we saw gold stocks under pressure, gold a little bit under pressure, and I think the rand strength was hurting them.